Alright guys, welcome back. Let's have a look at SPX S&P 500 SPY, basically levels to watch. So this is SPX on my chart. Today we gave back the gains we had, but still managed to close slightly positive, and it's pretty much thanks to all those big large cap names taking a break. If you take a look at SPX daily performance, S&P 500, big names such as Google, Apple, Microsoft, Amazon, Tesla was slightly positive today, but all those names took a break while every other sector was positive today. But if you take a look at the year-to-date performance for S&P 500, you will know what I'm talking about. These mega cap names are holding up the market, and maybe anytime these names start pulling back, you will see SPX maybe break this level of 3925, 3900. Because if I switch to SPY, you can see that a lot of volume came in that zone from 380 all the way to 390. You can see the volume that we traded with 130, 140 million plus days. And today was super lowest volume day in the last 2 weeks, probably today for SPY, 74 million or so. So on SPY, 200-day moving average at the moment 392. That's the support I'm watching. Resistance 450. So basically 450 cents. That's the level on 50-day moving average. And also this $400 level is pretty much resistance, pretty decent resistance if you go back for the rest of basically at least this year, January, February, March. So those are the two crucial levels I'm watching. We can very well chop around here. We do have basically Q1 ending in a couple days, and we're gonna have earnings kick in almost like 2 weeks or so, and banks are going to start reporting, so maybe we won't do much until then. And also 31st of March, it's officially Q1 is going to end. And if you take a look at just the quarterly candle for the SPX, you can see it's not significantly positive, but it's still positive. Year to date, S&P 500 is positive, SPX is positive, but the well-doing sector at the moment is basically Nasdaq 100. I think Nasdaq 100 year to date is somewhere 15%, while SPX S&P 500 only 5%, thanks to all those tech names doing very well. So yeah, QQQ's year to date 15%, Nasdaq same thing. So I'm watching at the moment for just hint. Are we gonna push higher going into the end of the quarter, or what's going on here? You can see this is the percent of stocks above their moving averages, major moving averages: 200-day, 150, 100-day, 50-day, 20-day, and 5-day. So for ultra short-term trades, I look at these two numbers: percent of stocks that are above 20-day and 5-day. Anytime these numbers get higher, while all these major moving averages are lower, percentages are lower, I tend to play market to the upside, but it's ultra short term in terms of day trading. But you can see in 50-day, 100-day, 200-day, overall names, most names are still in a downtrend. Only like 24% of S&P 500 above their 50-day moving average. Even though if you look at the 50-day moving average on a chart, it's an uptrend, but a lot of names got hit hard. But if those 6 names start to take a break from here, we can see more downside, or we can just chop around, because without those names, market can push higher, much higher, just based on their market capitalization, because S&P 500 is market cap weighted index. Also, I just wanted to show relative performance, where I'm sure you have heard real estate REITs, commercial real estate has been getting hit pretty hard because office occupancy not at where a lot of people expected after reopening. Major like metro areas occupancy rate, I'm sure I have it somewhere in my desktop where I just took a screenshot. Office attendance in major US cities, you can see it's not even barely half in big metropolitan areas. And that's why those names may be having relief bounce, and same thing with regional banks, maybe relief bounce, and we're gonna resume the selling later on. But so far you can see 1 month performance, financials, real estate, energy got pretty hit hard, and while communication and technology sector held up the overall market, and consumer defensive and healthcare pretty much was flat. Same thing with utilities, they don't contribute much to the index, but healthcare is a pretty big sector as well, but it was flat. Okay, and if you take a look at the 3 months performance, basically Q1, you can see where the money was: consumer cyclical, communication services, tech. So these sectors did very well this first quarter. We still have 4 more days, but we might definitely see some rotation. People could just take these profits and go buy those financial names, REITs, and because those things pay more dividend, and maybe people want to park their money over there. But so far, not much happening. Choppy market. And the big numbers are going to come out, data at the end of the week, and maybe even Thursday we have GDP, jobless claims. A lot of people waiting for PMI and personal income. So that's all I have for this update for SPX SPY. Those are the levels I'm watching, and these are the things I'm watching going forward. So thanks for watching. See you in the next one.